All right, so I gave you a 401k idea earlier. Let's talk about a trading stock right now, Cypress Semiconductor. This ticker symbol, CY. A lot of you guys know this maybe more for the brash CEO than the company, but look at this chart. Initially, I was reluctant to chase this because this has been a dead stock for a long time. Now I'm really starting to think that this goes on. Now, they took over a company called Cpayne, which is focused on embedded systems, flash, microcontrollers. Essentially, they control a lot of things, and they're big in that auto space. You know, they had the CES this week, the Consumer Electronics Show. It was all about electronics inside cars. Also industrial stuff, too. I will tell you it's a high-risk play. Breaks out, though. It already broke out this 50-day moving average. From here, I'm thinking it goes $18, maybe $19. Yes, it's extraordinary volatile, but I think it's a good trading play that you can make money on between now and the next 10 days, maybe 2 weeks. What do you think, Matt?
I like it for trading. It's very high risk for me, but the deal with that expansion that they did, I like the 3D stuff they're doing with the cars. It's going to be accretive within a year. That's always a good deal. So I think you can ride this one better for a little bit longer. From there, maybe check back in a few months.
TJ Rogers is the CEO, and this guy's brash. He talks a lot of smack, which I like. He's a free market guy, but he's been a terrible CEO, I think, for shareholders.
I think what I like about the pick is they have a commitment to product development, which I think is essential for the space. They're looking for things that take up less space, have more power. So I do think it'll be volatile, but I think the brashness of the CEO and his commitment to product development is why I find it interesting.
Micron missed yesterday. Stock was down a little bit, came back, and then it was up big today. These semiconductors, I think, will get a pass sometime this year and continue to do pretty well. Do you watch them at all?
Well, what's interesting about this company is that this merger that they did, it's good from the bottom line growth perspective. It's going to save them $135 million. So in that aspect, I think that's a good start.
You like the synergies.
I do like the synergies, even though I don't like that word synergies.
Yeah.
I like the synergies.
What do you think about these deals? We had a show. We did the show earlier, and earlier in the week we talked about these mergers dropping dramatically.
Yeah.
And a lot of people said because after all those big deals in the late 90s, companies found out they typically don't work. What do you
we go through cycles of that, though,
yeah,
where we get these combinations, and you go through and companies keep getting conglomerates. And then we go through another decade of where they start spinning off all these companies. I don't know. What decade are we in right now?
I don't know. I think we're heading back to the conglomerate decade. We'll see. All right.